Welcome back to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm pleased to have a couple of good friends with me, both of whom provide excellent research and investment ideas for their paid subscribers to the newsletters. I'm talking about Eric Coffin, who writes the Hard Rock Analyst newsletter, and you can go to hraadvisory.com to learn more about Eric's work. And I'm talking about Gwen Preston, who writes Resource Maven, which you can learn more about by going to resourcemaven.ca. Both Gwen and Eric have a very good understanding of what it takes to make money investing in the mineral exploration sector, and both articulate those views very, very, very well, both in a written form as well as on the show, which you'll hear in just a few minutes. Gwen and Eric will be speaking at the Metals Investor Forum along with other independent newsletter writers like Brent Cook, Joe Masmeter, Brian London, David Morgan, John Kaiser, Greg McCoach, my partner Chen Lin, and myself. And this Metals Investor Forum event takes place right before the one of the largest, if not the largest, mining conference in the world. That's the Prospector and Developers Conference, or PDAC for short. And so if you're in the Toronto area and you're there on the 29th of this month and the first day of March, you might want to check in. Assure yourself a position. It is free, but you do need to sign up beforehand. And you can do that by going to jtaylormedia.com. Just click on the Metals Investor Forum banner, and your name and email will suffice to assure you a spot at this excellent conference. Anyway, let's get to our guests, Gwen Preston and Eric Coffin. I'd like to start with you, Eric. I've been quite impressed. I've been quite impressed with in listening to you at the Metals Investor Forum and also reading your materials. I've been quite impressed with your analysis of various financial markets. And you know, I tend personally to look at larger macro-scale models, economic models. You really seem to understand the moving parts in real time better than I do. I believe that's the case anyway. That's why I pay a lot of attention to what you have to say. So, would like to get your idea about what you're seeing in the markets today. We're seeing an equity market that was very weak earlier today seems to be coming back as it seems to do so often. On the other hand, despite a strong dollar and a continued strong equity market, we're seeing a lot of strength in gold today, with gold spiking up over, I don't know, spiking's the right word. It's been stronger. It's edged up above 1,600. So just like to get your views on the markets in general right now.
I think we're seeing a continuation of essentially it's a liquidity-driven equity bubble on Wall Street that's been going since about September, since the Fed turned tail yet again, and more to the point, since they started their large-scale operations in the repo market. I know Jay Powell and any number of bullish Wall Street commentators will tell you that what he's doing isn't QE. I don't really agree with that for two reasons. One is, I won't bore you with the details of the repo operations, but one of those sets of transactions is not just primary dealers, but actually hedge funds selling treasuries and getting cash from the Fed. That injects more money into the money supply, more liquidity into the market, and in the case of hedge funds, directly gives them cash balances they can lever up and buy stocks, and they've been doing a hell of a lot of that. And it's also, it's QE, quote unquote, in the sense that the market accepts it as being QE. So whether it fits a technical definition really doesn't matter, because the effect of it is the same as QE. And so we've seen this run. It's like, what, 400 or 500 S&P points now. And today is a good example where the psychology has just gotten so strongly about liquidity and what's the Fed going to do, that we're sort of in one of these bad news is good news markets where, there was some relatively bad news about the coronavirus in China. Ironically, tens of thousands of Chinese citizens getting sick and several thousand dying apparently wasn't enough to have an impact on Wall Street, but a revenue warning from Apple was enough to have everybody on Wall Street going, oh, I guess this virus is a thing, which I find a little disgusting, frankly, but that's how things went. Now, why does the gold price go up along with that, and along with the dollar, which has been very strong? Part of what you're seeing with this liquidity flows is you're seeing a lot of money drawn into the U.S., both the stock and the bond market, and those transactions are essentially people buying dollars as part of the transaction. But the other thing that QE and its associated strength in the bond market is doing is pulling yields down.
Yeah.
One thing interesting happened again last week, and that's that the U.S. CPI tagged up a little bit, a couple of percent a year. But when you look at the yield curve being pulled down by all this QE and probably fear buying in the bond market and compare it to the new CPI readings, essentially the entire yield curve has gone negative again. And by that I mean negative real yields. And you and I have talked about this before. One of the best environments for gold and silver, precious metals, is when you have negative real yields. And we've got those again as of last week. And I think that's actually part of the reason you're seeing gold trade so well, even though the U.S. dollar's been strong as hell for the last couple of weeks. Yeah.
But it makes a lot of sense. Certainly in real terms, I think the 10-year, I noticed yesterday, was edged into negative real terms yield. So, it's very,
most of the yield curve is inverted, too, which is also, that's probably got a few people getting spooked again, because this is the third time now it's happened in a year, so that's not a good sign.
No, not a good sign. And you put together all that's happening fundamentally with the disruption of supply chains around the world having to do with this virus. It looks very problematic. Well, okay, gold is stronger. What are a couple of your strong ideas, your ideas for junior gold stocks or exploration companies?
I'll second I won't go into it because I know you just spent a bunch of time talking to my friend Quentin about it, but I'll second the motion just on Lion One and just say, that's a stock I followed for a long time.
Yes,
I know Wally quite well, and I knew the original CEO even better. But in terms of more current ones, I guess one would be Vizsla Resources, which is VZLA on the venture. Vizsla is acquiring essentially an entire silver mining camp in Mexico. Most of it's never been drilled. They put out a bunch of sample results, very high grade, kilogram silver results, and very high grade gold results in some cases, which I like. They've started a almost 15,000 meter drill program. The stock had a fairly decent move from 40 cents to 80 cents, and it's pulled back to the 60s, and it's just kind of going sideways. I'm not expecting drill results not until next month anyway. They'd love to have them for PDAC, but I don't think they will. So I think it's probably going to keep going sideways here for a little while, but I think this is a really good opportunity to enter in this price range because I think we'll see a lot more sampling results, but I also think once the drill results start arriving, and drill results always have a bigger impact, I'm expecting some, multi-kilo type drill intercepts, and those tend to have a really, big impact on a stock. I think that stock's going to do really, really well this year.
Yeah, I'm noticing there's only about 48 million shares out too. So at 60 cents, it's still very reasonably.
They just raised
priced,
6 million at 40 cents. So they're in good shape. They don't need to raise money for the work they're doing. They're just, I'm sure the right raise at the right price they take, but they don't need it for the drilling they're doing right now. They're cashed out.
All right, good. So they should be having a regular flow of drill results coming out, you expect then?
Yeah, probably start. I don't think they're going to get them out fast next month. It's just, even this time of year, it doesn't seem the labs are that fast, but we should see more. As well as drilling, they've got several crews out doing sampling of all these old workings, and at surface, they've actually found 2 new veins. I'm expecting that kind of sample results probably sooner. We should start seeing more of those anytime, but drill results themselves probably not until next month.
Will Vizsla be at the Metals Investor Forum? And
they will be.
They will be.
And they'll be at MIF, and they'll be at PDAC as well.
Yeah, do you have a second, quickly, do you have a second one that you might like to mention? Another name?
Very quickly, and this one's had a fairly good move today. I think partially because of the gold price, partially because of a mutual friend of all of ours started talking about it today. That's a company called Grand Portage, GPG.
Oh, yeah.
Gwen and I both follow this stock. I've known the CEO for 30 years. He's a great guy. They've got a project with about 850,000 high-grade ounces. It's in Alaska, which sounds scary, but it's right at the south end of the Alaska Panhandle, close to Juneau. It's also not a very high elevation. Ian thinks he can actually start drilling this year in April. If he can do that, then he's got a 7-month season, and that really kind of gets rid of the seasonality issue. And I just think in this kind of gold market, a company that's got a 10-gram plus resource is going to get attention. And they really haven't done any marketing or anything up until about a month ago. They were quiet for a couple of years, but they're really kind of going out there. They're going to be at MIF as well. Like they're going to get busy with the marketing. So I think they're probably going to have a pretty good year too.
Oh, it does sound very exciting. All right. Well, Gwen, you're involved with not only writing a newsletter, a couple of different ones, I guess, depending on the sort of different levels that you provide service, different levels of service, but you've also started a financing opportunities program in which you help companies raise capital to put in the ground. How are you finding this market? I guess it's certainly a lot easier to raise money now than it was a year or two ago, right?
Certainly. It certainly is easier. That said, it still isn't easy. I think there's a lot of teams out there in the junior exploration space who still do complain about how difficult it is to raise money. And fair enough. There's not oodles of investor capital flowing to exploration stories, and that's just hand in hand with the fact that the biggest gains have still, at this stage in the market, gone to the majors, and we haven't had as much of the trickle-down effect as we'd like, and so the juniors still haven't, that we don't have a rising tide effect at this point. But it is a lot easier now than it was a year ago, let alone 2 years ago, for teams to raise money, as long as they're good. So they have a good team with the right geologic experience and good capital markets knowledge, and it's a good geologic opportunity, and they have a good plan for how to create value with the money that they raised. I did start a new conference. I did my first one in the fall, and then I just had another one last week. It's called Financing Opportunities, and I did it because, we all attend the Metals Investor Forum and similar events like that, and they're important. They're great events, but every company that's presents their story as a market opportunity, which it absolutely is. We all buy and sell in the market, and that's an important part of what happens. But there's also this thought that if you need to raise money, it's like a detriment on the stock. Yeah. But at the same time, a lot of the experienced investors are walking around the conference looking for financings. And why are they doing that? Well, they're doing it for the same reason that I'm spending a lot of time looking for financings, which is warrants, right? So warrants, when you invest in a financing, you get a warrant, which lets you buy stock for a set period of time, a year, 2 years, at a set price. So if the stock does well, you can add to your position at an earlier, lower price. And warrants, I mean, I'm biased, obviously. Clearly, I set up this conference because this is my perspective on the space right now, but I think we're going into a couple of strong years in the gold space. As that happens, we will get more of that rising tide effect. Money will become more available, and as that happens, warrants will disappear. And so if you want to position to really profit as this gold market gets going, I think you need to be sowing your seeds right now, which is investing in financings and getting warrants that will likely pay as things improve down the road. And so, I wanted to put that argument out, and I wanted to invite investors who like to participate in financings or want to learn about participating in financings to come and meet companies that are financing that I think offer a good opportunity. And so we had 8 companies at the event, and it was a range. There was 2 porphyry explorers, there was a silver explorer, there was a uranium explorer, and then there were a couple gold explorers focused in Nevada, BC, and Yukon. So it was a range of companies. But the common thread, of course, was that I, at least in them, saw clear value opportunities. So some of them were new listings. People like to get in it when a company's newly listed because that's often a good way to get in at a low level. No guarantees, but often a good way. Most of them have fairly tight share structures, which is a nice way to boost your odds of per share upside on success. And what I think is most important is they all have clear plans to deploy the capital that they're raising into defined exploration programs that gives that opportunity for success. So if there's success, not only do your shares appreciate, but then your warrants are in the money and you can add to your position down the road. So I think warrants are an important aspect for the market right now. They will disappear as the market strengthens because there won't be the need to offer the incentive of warrants to get investors to participate in financings. And so that's an area that I'm focusing on quite a bit these days, and I'm having fun with it.
Yeah, I guess you probably are. And these would be companies that you've vetted, companies that you've studied and know something about and have some confidence in before you invite them in, I suppose, right?
Certainly. So Eric has a similar system with his subscribers where I have a group of my subscribers who have the opportunity to participate alongside me when I invest in private placements. So when I find a financing that I like enough that I'm putting money into it, I secure an allocation and give those premium subscribers, an opportunity to participate alongside. And my conference is basically just that in a day for anybody who shows up. So they're all financings that I'm participating in. So yes, they certainly have met my bar of requirement. And I'm just giving other people access to these, which they may not realize offer opportunity. They may not have the knowledge that they're happening, right? IPOs are hard to know about. So yeah, it's just about getting my network, using my knowledge and network to help more more investors benefit from the financing angle of our space.
Right. Well, it certainly strikes me as this would be a good time to definitely take advantage of those warrants, because there will be a time when this market gets overheated. I don't think it's another couple of years away yet, perhaps, but then the opportunities won't be as great. And at some point in time, I hope someone will help me know when to take some money off the table on these, because that's been one of my problems in the past. Is I've stuck with the bull market. I mean, there are some people out there that seem to know when to fold them, right? And
I know, right? That's a skill.
But before we run out of time, Gwen, we've got to get a couple of your top picks and what really has you excited now, and maybe there are a couple of them that you're taking to the Metals Investor Forum, maybe not, but what has you most excited now? What are a couple of your top ideas?
I mean, I have there's a lot of stocks actually that have me pretty excited right now, but I would say that one that I'll highlight is Core Mining. That's Kore. This is a team that has two projects in California called Imperial and Long Valley, and then an exploration project up in British Columbia. They have a significant resource. They've got 5 million ounces across those projects already defined. But what I like about Core is that it's a two-pronged approach. So Imperial, which is their more advanced asset down in California, it's a permitting story. And there's a long history there that we will not get into right now. It's a permitting story. I have good confidence that their odds of success there are high. But the market never likes a permitting story. So while that grinds along and adds tangible value as it progresses, that's great, but the market isn't going to care, which is why it's great that they also have Long Valley, which is an exploration, a gold exploration project in California, and FG Gold, which is a gold exploration project in British Columbia. So I think from the way that they're approaching those two exploration assets, they have some pretty interesting ideas about, both of them are places that have known gold, have small resources defined. Both of them have low-grade resources defined, but there's lots of high-grade intercepts within those low-grade resources. So this team has come in and come up with some new ideas for how to understand that high grade. So basically, Core to me looks like an opportunity for an advanced permitting situation to slowly add sort of fundamental value, while there's opportunity for splash if there's, drilling success on these exploration projects that have known gold, but where new geologic interpretations look likely, definitely give you the potential for some exploration success. So I like the opportunity at Core Mining for sure.
Right. 78 million shares and about 29 cents, something like that in Canadian money. So, okay, we have time for another one yet. Another idea?
Sure. If you want, for those who really like exploration, who like to speculate on exploration, I'll name Libero Copper and Gold. So Libero is very inexpensive right now. I think it's probably 6 or 7 cents. But this is a company that has a couple projects. It was founded as a copper project accumulator is what I'll call it. So they have a fairly big copper porphyry down in Colombia that will be valuable in and of itself when copper comes back into vogue. But the near-term excitement is all focused on what's called Big Red, which is in the Golden Triangle in British Columbia. And this project this was covered in glaciers until recently, and so this is the first team to really come up and take a look at it while it's been accessible. And it's got very high-grade golden soil anomalies and high-grade rock samples and large anomalies and coincident geophysics, and it all looks really good. But this is all still very early stage. That's what's been done so far is soil sampling, talus sampling, rock sampling, and geophysics. They wanted to tried to drill last summer, but by the time permits happened, it got too late in the season and they weren't able to drill. So that opportunity remains intact, and the whole speculation is now sort of premised on what happens when they get out there with drills this year. And since they tried to drill last year, the drill pads are set up, so they should be able to step right into some of these targets and start drilling. So with these really seasonal projects, like in the Golden Triangle, where the season is short for exploration, one way to do it, to be blunt, is to buy Libero today at 6 or 7 cents and ride it while speculation builds of what might happen. And you can almost always ride these things up quite a bit. Whether you hold on until results or not is up to you, whether, your confidence in the target. But there's good opportunity just in the speculation as the seasonality comes closer. But then I also really like these targets. I think Big Red looks like an exciting possibility in a gold-rich area of the world. So that's another one that I'll mention.
Yeah, indeed. 19 targets I see in the headlines. I'm looking at at a recent press release. 93 million shares out, 9.5 cents Canadian. That's about 7.5 cents in U.S. money or something like that. But all right, well, thanks. A couple of great ideas. I know that you and Eric both have a lot more, and at the Metals Investor Forum, you'll be bringing some of your favorite stories there. I look forward to seeing both of you there, and many of my listeners, hopefully, some of them at least, will be there. Those that are going to the PDAC certainly should stop in and pay a visit, and be sure to sign up. First, go to J. Taylor Media, click on the banner. Your name and email address will suffice. Eric and Gwen, thank you so much for being with us today.
Thanks for having me on there, Jay.
Oh, absolutely.
Thanks,
it's always
Jay.
great to have both of you. Your ideas are always very much worth paying attention to.